I now hand the conference over to Mr. Harshvardhan Dole from IIFL Capital Limited. Thank you, and over to you, sir.
Thank you, moderator. Greetings, everyone. On behalf of IIFL Securities, I welcome you all for the second quarter earnings call of Torrent Power. To discuss the performance details and share the outlook for the subsequent quarters, we have the senior management team of Torrent Power. Today we have Mr. Saurabh Mashruwala, VP Finance, Rishi, Shah, GM Finance, and Jayprakash, Manager Finance. Without much of a delay, I'd like to hand over the call to the management for their opening remarks, subsequent to which we can have the Q&A links open up. Over to you, sir.
Thank you, Harsh. Good morning to all of you. Thank you for the joining earnings calls of Torrent Power for the Q2FY21. We'll take you through the performance of the quarter, after which phone lines will be open for Q&A session. Consolidated cash reported for the quarter is 204 crores as compared to 750 crores reported in corresponding quarter last year. It is lower by 546 crores. That is roughly 73%. PAT has reduced considerably. However, if you recollect, large part of this is attributable to one-off recognition of 281 crores of deferred tax assets comparable quarter last year due to reduction in MAT rate from 21.55% to 17.47%. Adjusted for this change, PAT of the reported quarter is reported degrowth of 57%. Now moving to the PBT numbers. Reported PBT for the quarter is 230 crores as compared to 533 crores reported in the corresponding quarter last year, which is lower by about 300 crores, that is 57%. I will now explain you the non-recurring items first to get a clear picture of the underlying performance. There are non-recurring items in both the quarters, current quarter as well as comparable last year quarter also. I will now touch upon the non-recurring item of the current year quarter. The non-recurring item in the current year quarters includes three items. First, the provision of 100 crores towards doubtful debts, mainly in the franchisee distribution due to lower collection efficiency. We expect meaningful recovery against this provision during the course of next 12 months. Second item, there is an under recovery of fuel cost of 42 crores in Uno Fusion project, which will be reversed in Q3. The third item is the gain and income of 21 crores arising from CRC tariff order for our Fusion project passed during the current quarter. So all put together, net non-recurring charge we have booked in Q2 is 121 crores. So we have booked the charge of 121 crores in current quarter. Now I talk about the non-recurring income, non-recurring items of the last quarter. The income of 200 crores accrued in the license distribution segment on receipt of favorable orders from the FCL with respect to carrying cost claims pertaining to the earlier year. So we have last quarter we have income of 200 crores, one-off income of 200 crores. The second item, against this provision of 161 crores was made against for our 63 wind power project. So all put together, net non-recurring income in the corresponding Q2 was 39 crores. Adjusted for these two one-off, PBT for the quarter is 351 crores as compared to adjusted PBT of 494 crores in corresponding quarter last year. It is lower by 143 crores. That is roughly 29% instead of 57% on a reported basis. So the current quarter indicated degrowth on adjusted basis. It is pertinent to note that sequentially, adjusted PBT for the current quarter is higher by 79% than the adjusted PBT of Q1. Thus, there is a marked improvement in the performance of quarter-to-quarter basis, reflecting improved condition of the economy. Now I touch upon the reason for lower PBT for the quarter, which is mainly attributable to the COVID impact. The first reason is the demand and customer collection in our franchisee distribution business of Agra, Bhiwandi and SNK were impacted. Demand was lower by almost 18% as compared to the corresponding quarter of 1920. This resulted in lower contribution as well as higher T&D losses. However, the demand has shown a marked recovery of 28% growth over the Q1 of this year, current year. The second reason is lower wind PLF of 28.7% in current quarter as compared to 39.1% in corresponding quarter last year. That is lower by 10.4% in absolute terms. Most of the pan-India wind sites experience 20 to 40% lower wind speed than a normal in this monsoon season. Third reason is a lower profitability in our merchant power business. The fourth reason is a positive gain. We have benefited from the lower interest cost by 37 crores, which is mainly due to the reduced average rate level as well as lower rate of interest. With this, I complete the overview of the quarterly performance. I would now request the participants to ask questions on the performance, and we can go with the Q&A session. Thank you so much.
Thank you very much. We will now begin the question and answer session.
Yeah.
Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yes, sir. Good morning, sir, and thanks for the opportunity. Sir, my first question is how the demand is faring in September and October, especially in Surat and Bhiwandi. And also, if you can comment on the overall demand for the Torrent distribution area.
Yeah, Surat and Bhiwandi are more of an industrial town. So I talk about the demand in September, for example. Demand in September for Surat was down by about 18%. And October it bounced back to positive 6% growth. So demand was negative in September for Surat. But in October we have experienced about 6% positive demand as compared with the comparable last quarter last year. And in case of Bhiwandi, demand again was down by 18% in September. And in October, we have witnessed about that 18% negative demand was going down to minus 2%. So 2% reduction in demand with the comparable quarter last year. And overall, on an overall basis, in Q2, our license distribution has witnessed degrowth of about 15%. And the franchise distribution has witnessed a degrowth of about 18%. So overall demand was down by almost 16% in Q2 as compared with the comparable quarter last year.
Understood.
Just to add on this, if you look at Q1 of this year, there is a substantial recovery in the demand. As we had said in Q1 that Q1 could be the worst quarter, and going forward we see improvement coming up on a quarter-on-quarter basis. So Q2 is more or less in line with what we had expected, and which on a sequential basis it is improving.
So Q1 demand was down by 37%. So it was 16% at Q2 level, as on 30th September.
Understood, sir.
There is a marked improvement in the demand in the course of the quarter.
Yes, sir. Good to hear that, sir. My second question is it possible to give us the breakup of EBITDA and PBT business-wise for the quarter, and also a comparable number for the last year same quarter?
I can give the EBITDA-wise breakup.
Sure.
First, then we will give the PBIT breakup also. The gas-based project, this quarter EBITDA is about 175 crores as compared with 221 crores comparable comparable quarter of last year. And the renewable, about 180 crores is the EBITDA for the current quarter, and comparable quarter of last year is 226 crores. The license distribution business is about 352 crores EBITDA for the current quarter. The comparable quarter of last year is 332 crores. So that is an improvement about 20 crores in license distribution business. Franchise distribution business EBITDA is 153 crores as compared with the last year EBITDA of 247 crores. And total EBITDA, this is before one-off, I would say. So total EBITDA is 855 crores before one-off for the current quarter, and comparable quarter of last is 10441 crores. And one-off item is there was a charge of 121 crores in the current quarter, while there is an income of 39 crores in the comparable last year quarter. So EBITDA reported is 749 crores, and for the current quarter, and the comparable quarter of last is 1,104 crores. Coming back to the PBIT numbers, before one-off I'm talking about, the gas-based power project is 64 crores current year. The last year is 87 crores, so reduction by 23 crores, mainly because of the merchant merchant contribution. Renewable is 111 crores current year, as compared with the last year 164 crores. This is mainly because of the lower wind speed in the country for our project. License distribution is 247 crores PBIT for the current year, and the last year is 233 crores. Franchise distribution is 129 crores PBIT, and last year comparable number is 225 crores. And the finance cost is net of treasury is about 188 crores for the current quarter, and the comparable last year quarter is 224 crores, about 37% reduction. 37 crores reduction. So these are the numbers for the business segment wise.
Thank you, sir. Thank you. I'll get back in the queue. Thank you.
Thank you. The next question is from the line of Abhishek Puri from Axis Capital. Please go ahead.
Yes, sir. Thank you for the opportunity. So two things. First, could you tell us why Surat T&D losses have normalized, but Ahmedabad T&D losses have not normalized? Ahmedabad was more of residential load, right?
Surat current quarter T&D loss is about 3.37%. 3.84% as against 3.84% for the H1, I would say, because you want us to see the YTD basis. So at YTD basis, 3.84 was the T&D loss up to September, as compared with 3.37 of comparable last year H1. So there is a marginal increase. There is not much increase, I would say, about 0.5% increase in the T&D losses in case of Surat.
Right. But why is Ahmedabad not normalized? Ahmedabad is still quite high, 2.66% of last quarter versus this year it is at 9.34.
If you look at the mix of the customer, so more of a consumption in residential segment is higher as compared with the commercial and industrial segment. This is the reason why the T&D loss is a bit higher in Ahmedabad and Surat in the current first half.
Okay, and similarly for Bhiwandi, when do we expect the losses to start normalizing, because we are running at almost 900 basis points higher than last year?
Yes. I think Q4 we can see that we will be near to the last year level. That is what we can see.
Abhishek, just to add on what Saurabh told, in license distribution business, we expect that for the year we would still be below the normative levels as far as license distribution is concerned. As far as franchise distribution is concerned, there would be some elevation in terms of T&D losses are concerned. But by Q4, we are expecting we should be normalizing compared to Q4 of last year. But for the full year, there will still be a slight elevation in T&D losses are concerned.
Got that. Thank you. And secondly, in terms of merchant power volumes and realization, you said the merchant realizations were lower and lower contribution was there. If you can give us some numbers, it will be helpful.
See, the merchant contribution in the current quarter of Q2, we have sold about 480 MUs on a contribution of 24 paisa, and the last year it was 395 MUs. So there was a growth of 22% in the merchant volume. There is a reduction in the margin. So last year we earned about 72 paisa per unit contribution, as compared with current quarter is 24 paisa.
Right. And lastly, if I may ask, in terms of the gas contracts that you have, since Henry Hub prices have moved up, you have a lot of gas which is linked to the crude prices. So if you can give us some idea of how many cargoes are tied up and what prices, because they are largely fixed price, right?
Yeah, they are a fixed price contract. Yes. The position has not changed materially, I would say, as compared with the Q1. For current year, we are fully booked, I would say. Up to March, we are fully booked. For the next year, about 7 cargoes we have contracted so far.
And that price range will be similar as previous period of about $3 to $4?
Yeah, around that only. About $4 kind of a thing.
Right. Thank you so much, and I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Good morning. So my first question is more, it's good to see, the provisioning what we talked about in the last quarter. So it's good to see we are providing for that. But generally, this provision, just wanted to understand from a going forward perspective, what kind of a schemes are you giving to your end customer? It's more of, EMI, schemes which you see visibility that can come back at this, in let's say next 2-3 quarters or 4 quarters, once you're providing this, more to understand that is it the last provisioning you see, or you see further provisioning that can come going forward? That's my sorry. Yeah, please go ahead, sir.
Yeah. So this provision, this is a provision. It is not a bad debt. So we expect that we will make an effort to recover the most of the amount in the course of next 12 months time. So because of a lockdown and lots of restrictions of the state government, we could not able to conduct the vigilance activity for the franchise distribution area. So now that activity has started. So we expect that we will get the result and we will recover the most of that significant amount, I would say, during the course of next 12 months time.
Nitin, just to add on what Saurabh told, it is more about recoverability for the units which you have sold. Now, so what happens is typically people who have purchased power will take some time to pay. So it would be a time lag wherein you have to manage wherein they will be able to pay. Now, what happens is that as far as accounting norms are concerned, if it goes beyond certain levels, you have to provide for it. But that essentially it doesn't mean that it's a bad debt. So effectively, out of this, I think major part of it would get recovered over a period of 12 months. So it is just a provisioning we have done.
I understand, Rishi. The question was more because if you ask, if you recollect, I only asked this question in previous quarter that why we are not providing when everything is shut down. It's good to see that we have provided. My question was more because now you understand the customer profile in all the distribution franchisee very well because things have bounced back. Now going forward, the question was more that does it cover enough room in terms of provisioning that, going forward, even if let's say a 10% increase, more goes bust or more goes down in terms of their payment, this provision is more or less sorted and would not, the company would not compel to provide for more provision. The question was more from a direction from a provisioning perspective. Because now you understand the customer psyche well.
Yeah, we don't expect that the further provision on a net basis is required.
Got it. That's very helpful. My second question is, sir, with respect to, we saw government intervening a lot in a lot of the state distribution, not to charge the consumer, wait for the consumer to pay back. Any sort of pressure you are seeing from the government side, from the local state government, not to pressurize the consumer, the end consumer or the MSMEs, which you have a lot of in your, let's say, Bhiwandi. Any sort of pressure from them?
Which was there in the Q2 and some part of Q2, but not now.
Got it. And so just lastly, if you can comment on your wind generation part. So I understand the pattern itself was very disturbing in the wind side in Gujarat. But any comment going forward would be helpful. That's my last question. Thank you.
The wind drop in wind resources was something abnormal, which has happened in after a long period of time. So we feel that this should not be continue for more months, I would say. So it will be normalized, I think, in couple of it is normalized. It's a one-off event. It's a one-off event. So now things speed is normalizing.
Thank you. Thank you very much.
Thank you. The next question is from the line of Naresh Vaswani from Samiksha Capital. Please go ahead.
Yeah, so thanks for the opportunity. Sir, the government came out with the draft bidding document for privatization of distribution power companies. So how did you read in that in terms of opportunity for our company? And generally, when you bid for these utilities, what criteria you look in terms of returns, like in how much capex you need to invest in this for turning it profitable, how many years it takes to turn around? Any light on that would be helpful.
It will be depend on the case to case basis. Like for example, we can see in case of Bhiwandi, we have example of Bhiwandi in Agra, where capex would be we generally invest upfront capex so that you can start getting the results as quickly as possible. Bhiwandi, we have invested in first couple of years. We invest almost 400 crores capex, so that has started. It has impacted the reduction in T&D losses also. So this kind of in distribution capex would be not like a generation kind of a project. It will be in a phase manner, I would say. So every year you have to incur, depending upon the circle, depending on the area where you are in, where you are, you have to incur the capex and you have to plan the capex accordingly. It's not a bunch of capex will not be bunched up, I would say.
Right. So in how many years you generally see that T&D losses come down to the level where it becomes profitable for us?
Yeah, Agra, it was very, Bhiwandi, it was very quick. Agra, about within 4-5 years, we have started getting the results in terms of Bhiwandi, in terms of T&D losses. It has reached to a reasonable level, I would say.
Okay, and in Agra, how much did we spend in those 4 years in capex?
So far in Agra, we are there in Agra from since 2010. 10 years is there. So we have almost invested about 1,000 crores in Agra.
Okay, and in terms of this draft, how did you read into that in terms for the opportunity for us, sir?
So can you repeat the question?
I'm saying the government came out with the draft bidding document for the distribution privatization. So how did you read into that?
I think we are right now evaluating those drafts. So it is too early to comment as of now on those.
Okay. Okay, sir. Thanks. I'll come back in the queue.
Thank you. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. I have a couple of questions. So first on the wind side, the generation which was there in the first half, not the second quarter, just was it below the P75 level?
No, so by the way, it was below P90 levels, not P75 levels. And this is more coming out of the wind resource not being there for the entire country. So if you look at 4 major states, all of them have reported lower wind speeds.
Sure. So it was below P90 but not below P75. So it was within that band which was the long period average. Is that correct assessment?
Yes.
Sure. The second question is, so we had a capex expectation of 4,500 crores over the 3 years on the distribution side. This year we had highlighted it will be lower. So what was the capex in the first half and what is the expectation for the current year? If you could break that into the license and the franchisee, that will be great.
This first half we incurred capex of 350 crores, all distribution put together. And as we said in the last conference call, our guidance is about total capital about 800 to 900 crores for the year.
Sure.
And fleet would be about license out of 350 crores. Fleet would be about 260 crores for the license distribution business, and about 80 crores for the remaining is the franchise distribution business for the first half. And as far as the guidance is concerned, about between 600 to 700 crores is for license distribution business for the full year. Now between 200 to 300 crores for the franchise distribution business for the full year.
Sure. My last question is, even in the license, this year the volume is below what we had originally anticipated, or which was there in the tariff order which was given by the regulator. So is there any under recovery from the original expectation, because there was the previous year was also trued up and that was expected to be recovered this year?
So we don't expect on overall basis, yearly basis, we don't expect any under recovery for the year.
So we were expecting some recovery of past dues when we started this year, but that may not happen this year. But we don't expect any significant amount of under recovery or over recovery this year for the full year.
Sure. Yeah. Thank you so much. These are my questions.
Thank you. The next question is from the line of Aniket Mittal from Motilal Oswal Asset Management. Please go ahead.
Yes, thank you for the opportunity. So just to get a better hang on this provisioning that we've done, could you sort of quantify what has been the collection efficiency at Agra and Bhiwandi? Because I think if I remember in 1Q, our collection efficiency was somewhere around 70 to 80%. How has that moved in 2Q?
The collection efficiency, I will talk about the first half collection efficiency. The first half, Bhiwandi is about 96%. Agra is about 90% kind of a thing. And these are the two, Bhiwandi and Agra.
Okay. So on a quarterly basis, Aniket, I think we have improved significantly from Q1 of this year, wherein collection efficiency has improved at 99% in Bhiwandi and 95-96% in Agra. So I think we are seeing good traction on that front as far as collection efficiency is concerned on a quarter-on-quarter basis.
Okay. So just to try to understand what is this provision for? Because I think our 1Q collection numbers were lower, which is something that we were expecting, and hence we had done a provision in 4Q for that, right? If I'm not mistaken, that is how we did the provisioning, right?
We have a rule-based policy about the provision. So since if you have noticed in Q4 also we made provision of 48 crores. So which has helped us in Q1. So Q1, because of the rule-based provision, there was no need to make any additional provision. In Q2, because of our lower collection efficiency, we have to make a provision based on considering our normal provisioning policy.
Okay. But in 2Q, our overall collection efficiency has been around 100%, right? Is that not the case?
H1 is 96% for Bhiwandi and about 90% for Agra.
Okay. All right. Sure. And so just, I think in your opening remarks, you mentioned some under recoveries on Uno Sujan. Could you just throw some light on it? What is that related to?
Yeah. See, these are accounting things. Like, for example, we have a Sujan project, Uno Sujan project, and we are also selling power in merchant market also. So we purchase the cargo based on for each project individually. The storage facility which we have is a common facility. So consumption will happen for all the projects together, I would say. So because of the consumption is happening, we are booking the consumption based on a FIFO basis, but the billing to the consumer will happen at the contractor cargo rate only. So difference of this is the under recovery for the Uno Sujan project.
Okay. But that is something we expect to recover in the coming quarter.
Yeah, we are going to recover in the next quarter, Q3 on.
Sure. And so, another question, if I may. So I think the MYT regulations for both your Ahmedabad and Surat licenses are expected. Just from the next MYT perspective, let's say from a 5-year perspective, which is from FY22 to FY27, what is the amount of capex that we envisage for both Ahmedabad and Surat?
We have next 3 years guidance. We have given 1,500 crores for the license distribution area. So this will.
So would that largely continue?
Yeah, that will continue.
Okay. So just on that point, actually, to understand, if I look at the last year's MYT regulation and the average capex that we have done in the distribution license, it comes to around 800 crores. And now we're guiding for around 1,500 crores. So what is leading to the sharp jump versus if I look at the last year's MYT as well, the approved capex and what we projected was somewhere around 800 to 1,000 crores. So what is leading to the sharp jump from around 800 to 1,500?
Aniket, when we say 1,500 crores, it is license and franchise put together. So if you look at license business, it is 1,200 crores. And the franchise business would be around 300 crores additional. So when we say 1,500 crores, it would be both put together.
Even the 1,200 crores numbers but it looks a bit high. I mean, like I said, our average has been somewhere around 800 crores.
So it would include additional capex in my Dahej and for Dholera SIR also, and incremental capex in Ahmedabad and Surat. Now, typically, what we are planning to do in terms of Ahmedabad and Surat, that those plans have got delayed because of COVID and then onset of monsoon. So I think in next couple of years we should be able to recoup this capex.
Okay. So out of the 1,200 crore numbers, how much Dholera?
So Dholera, what we have said is that we will have a capex guidance around 500 crores of next 5 years, but that will depend on how it will pan out in Dholera. But right now, what we are doing is we are supplying construction power there. So we are building some small capacities there to import power. So it would not be a larger capex as of now, but going forward, if things improve, we'll have to incur a higher amount of capex.
Sure. And just one last question on the MYT itself. Now, typically what's happening within the Surat business is we sort of enjoy a good amount of savings on the T&D because our T&D loss seems to be lower than what the approved T&D is by the commission. So do we expect this normative T&D number to get reduced in the upcoming MYT? Is there a possibility of that?
It's already a stretch number. So let's hope that the regulator will not touch the normative numbers.
Okay, so we're expecting it to remain same. Hello?
Yeah.
Okay, sure. So thank you. I'll get back in the queue.
Thank you. The next question is from the line of Dhruv M. from HDFC Asset Management. Please go ahead.
Yeah, thank you so much. So the 100 crores provisioning, would it be fair to assume it is largely Bhiwandi? Because you see Amagra is recovered significantly. So is it Bhiwandi which is driving it?
It is all for all 3 locations, Bhiwandi, Agra and the SMK.
But the bigger portion will be Bhiwandi.
Agra is recovered, but not in terms of volume, but not in terms of collection efficiency. As I said, collection efficiency for the first half is 90%.
Okay. So is it possible to share what would be the quarterly revenue that you probably generate from Bhiwandi, or the annual revenue, some approximation?
What new number? Bhiwandi is about 400 crores for the current quarter.
Okay. And so 400 crores. So now you have reported a AT&C loss of 23%. So that would mean that of this, so this number 400 crores is net of this AT&C loss, right? This would be after this consideration. Okay. Okay. So had this AT&C loss not been there, your revenue would have been probably 500 or so.
Yeah.
Okay. And this 400 crores, of the 100 crores of selling, probably 60-70% is Bhiwandi. So of this 400 crores, 70 crores is what you have recognized as provision. Or
No,
this
no.
provision
So,
also includes under recoveries for, the bills that you had issued for the previous quarter which are not recovered, which is believed or not.
Dhruv, this 100 crores is not only in Bhiwandi. It is more or less evenly spread out across all the 3 franchise distribution areas.
Okay. Yeah, so that I understand. So probably I'm assuming about 60 odd crores will be Bhiwandi, given it is a bigger
No,
circle
no.
for you.
As I said, it is evenly spread out between all the 3 areas, more or less on a one-third basis. Bhiwandi is lower than the 2 areas, Agra and SMK.
Okay.
It
And sir,
more or less corresponds to the collection efficiencies which we have said. So I think Agra and SMK is a higher number compared to Bhiwandi.
Okay. And so what would be the cumulative provision that we have done over the last 3 quarters? I think 40-50 crores you did in 4Q. In 1Q you did...
48 crores in Q4 and these 100 crores in this Q2. There was very small provision of 5 crores in the Q1, not high.
Okay. And sir, in one of the previous calls you mentioned that you don't expect net incremental provision. But I was wondering, can some part of this reverse and boost your profit? I mean, it seems that you will be making provisions, but there will be offset also.
That is what we said in the beginning, that this is the provision which we have made. I mean, we expect that the company will make an effort to recover to maximum amount to the extent possible in next 12 months' time.
So I think major part of this provisioning should get reversed over a period of 12 months. So it is just a provisioning which we have done because of certain accounting rules we need to follow. But if you look at it will not end up in a bad debt kind of a situation.
Got it. That I understand, sir, but say for example 50 crores is, say 40 crores is, your provisioning for Bhiwandi on a revenue of 400 crores, which is also after the AT&C loss. That means some part of the losses are already covered in that number, on the 400 crores number. So almost 10% of what we are billing is not recovered. So I was just wondering, is this the last amount of provisioning that you're doing, something similar to the previous question, or there would be some more? Hello?
Yeah. So we don't expect there's a further provision.
Okay. And sir, secondly was on the, now you have a decent sense of, how the demand is panning out in Bhiwandi and probably Surat. Particularly focusing on Bhiwandi, do you see any permanent demand reduction? Any firm sense that you see? Is that what you're seeing? Some demand which will probably never come back? Any sense on that?
It's too early to say, but if you can just the big October number of Bhiwandi, almost we are back to the last year level. Very, very minuscule 2% drop in the comparable number of last year in terms of demand. So demand is coming back in Bhiwandi also.
Okay. So no connection cut that you have seen, nothing of that sort. Permanent connection cut that you have seen.
Not material, I would say, at this moment.
Got it. And so last question, what I remember was for the Fusion imported LNG, our long-term tie-up till December 2020, linked to crude. Are those renewed, and for what duration, or are we keeping those open?
So we are covered up to November, December next year.
Okay, and these still will be linked to crude, and you would have hedged those, right?
Yeah. Yes.
Okay. And sir, so given that the LNG can be very volatile, so do you have to go to the regulator to get an approval of the cost that, this is a fair cost and you can probably go ahead with it, or how does it work?
So we don't have to get the pre-approval of the regulator, but we are on a regular basis, we are updating them. What contract we have undertaken, we have contracted.
Okay. And so this new contract that you have signed will be similar to the last contract, in terms of pricing will be similar to the last contract. I think last was about $6-7. This would again be similar, or?
It will be at the current rate, I would say, about $4 kind of a thing.
Oh, that is further lower. Okay. Got it. That's all, sir. Thank you so much.
Thank you. The next question is from the line of Manvardhan Baid from Laurel Investment Advisory. Please go ahead.
Thank you for the opportunity for asking this question. there was an update about the Delhi distribution business and us participating in that. Any further color on that?
No comment. No comment. We don't have any comments on this.
Okay. Thank you.
Thank you. The next question is from the line of Aniket Mittal from Motilal Oswal Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity once again. So, the distribution franchise EBITDA number that you reported of 153 crores, out of this, what would be the EBITDA loss for SMK?
Aniket, it would be difficult for us to give you segment-wise numbers.
Okay, but just to get a sense of what's the trajectory happening at SMK right now, because I think on a year-on-year basis that would have impacted you negatively as well, right?
Yes. I can only say that if you remove a one-off adjustment, SMK was more or less breaking even.
Okay, it was breaking even.
For this quarter.
Oh, so there are certain provisions that we've done in SMK as well, right? Is it?
Yes.
Okay, and what has been the collection at SMK? Sorry, sort of start on this. If you could throw some light over there.
Collection efficiency, you mean?
Yeah.
Collection efficiency for SMK is about 80%.
80%. Okay. And the overall T&D loss levels would still be around 50%.
Overall T&D loss is about 39%.
Come down. Okay, T&D 39. Okay. Then how do we see the trajectory for this going, let's say, for the next couple of years, and especially this year? Would this still remain high, somewhere at around 40%?
Our objective is to try and reduce the if you can see the experience of Bhiwandi and Agra, we have next 5 years, I think in Agra we could able to achieve about 20% kind of a loss level. So similar thing we can expect in case of SMK also.
Okay. And so one more question if I may. So when this MYT regulation, let's say, comes in, and when it gets approved by the commission, we have a large amount of regulatory assets also sitting on our books, right, of around 1,000 crores. So how would we recover that? Does that get recovered when, let's say, the MYT comes in, or it would be in a more phased manner?
It will be a kind of a phased manner only.
So Aniket, if you look at last 3-4 years, our regulatory assets more or less remain stable at these levels. So typically it's a cycle wherein every year you recover the past gap, and then in that year you might end up at a gap or a surplus. So on an overall basis, it would be in a phased manner. But then if you look at the levels for last 3-4 years, it has more or less remained in the same range. So at least we are not adding up on any regulatory assets per se.
Okay. Sure. Understood.
And in this 1,000 crores, there are a couple of orders which are also pending true up in this year. So it also gets added there.
Sure. That is what I was trying to understand. So let's say when the MYT sort of order comes for the next 5 years, does this get trued up by itself, or it would be on a phase?
MYT doesn't cover that. It has to be a true up. So every November we file for true up order, and then in March the regulator gives you a true up order. It is covered under that. The MYT doesn't cover those areas.
Understood. Okay. Thank you. That's it from me.
Thank you. The next question is from the line of Vishal Biraria from Aviva Insurance. Please go ahead. Mr. Biraria, your line is in talk mode. Kindly go ahead with your question.
Yes, sorry for that. So one question on the collection efficiency as to when you mentioned that Bhiwandi's collection efficiency is 96%. So this is only for the bills that were generated and the collections that were done, only for those bills, for that section of customers? Or is there a scenario where you have not billed to certain section of customers, so that is excluded from the calculation of collection efficiency?
That would happen. It is though it's a collection efficiency of whatever we have billed based on that collection efficiency is derived. But billing, that won't happen that we have not billed to the customer.
So what proportion of customers would not have billed itself? I mean, what is that proportion?
See, like for example, if meter reading has not happened, we will bill to the consumer based on the assessed value.
Agreed, sir.
Yeah, so billing will happen on a every frequency, like monthly frequency or once in a 2 months. It's going to happen.
Okay. So just for the sake of better understanding, say there are 100 customers, all 100 have been billed?
Yes.
And out of those 100, this is the collection efficiency, that 96% of the amount that was billed has been collected. So there is no section of customers that were not billed.
Yes.
Okay. Thank you very much.
Thank you. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Yes, thanks for the opportunity again. Just one question. So on a slightly longer term basis, say 3 to 5 years, what could we expect as T&D losses in the franchisees, say Bhiwandi, Agra and SMK? And we understand Bhiwandi is more or less similar lines as Surat, where we are low single digit. So could we expect it that Bhiwandi could reach similar levels as Surat?
So I think Bhavin, that's a longish question. So I'll say that if you look at Surat and Ahmedabad, we are in the range of 3 to 5% kind of AT&C losses. And on a normative basis, Bhiwandi and Agra, it is in around 12 to 15% range. Now there is significant headroom which is available for us to reduce AT&C losses going forward. Now it will also depend on the license getting renewed or not. So we will try to reduce the losses as much as possible. And as far as headroom is concerned, there is significant headroom available for us to reduce the losses. As far as SMK is concerned, as Saurabh earlier said, that it will take some time for us to reduce the losses, looking at our experience in Bhiwandi and Agra. So I think it should be faster, but it will at least take 3 to 4 years for us to break even at that in SMK and then further reduce the losses there in SMK.
Sure. Thank you so much for the questions.
Thank you. The next question is from the line of Anuj Upadhyay from Emkay Global. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, can you mention how the consumer mix has changed in the Bhiwandi and Agra? In Q1, it has dropped to 73% in Bhiwandi, I guess. And for Agra, it was down to 23%. Are they back to their 90-40 odd level or still some part to cover?
Consumer mix, say for example, Bhiwandi, commercial and the industrial was about, for the last week was 91%.
Right, sir.
Now if you look at the Q2 breakup, it is about 86%. So
okay.
It's a change in favor of against commercial and industrial by about 5%. By about 5%.
Yes, sir.
In case of Agra, it was 43% industrial and commercial for the full year. And at Q2, it is about 32%.
This for Q2, right, sir?
Yes. Yes.
And, okay. And if we say for the first half, sir?
First half would be about 30%.
For Agra. And Bhiwandi, sir?
Bhiwandi, I would say about 81% kind of a thing. 81%.
81. And the SMK is largely residential, sir, right?
SMK is largely residential, yes.
How much would that be, sir? We can just...
SMK would be about 90%, I would say.
Okay, so 10% is CNI over there.
Yes.
Hello?
Yeah.
Yeah.
10%.
It's 10%.
10% is residential.
Okay. That's it, sir. Thanks.
Thank you. The next question is from the line of Dhruv M from HDFC Asset Management. Please go ahead.
Yes, sir. So thank you. So one clarification. In the earlier question, you mentioned that there are no significant permanent connection cuts. Despite that, you've taken provisions of 100 crores. That means you're supplying to customers. You're still supplying. I mean, the customers are not gone, and you're still supplying it to them. That is the confidence. That's why you have the confidence able to recover this amount.
See, there is a rules about disconnection, and so that disconnection rule we are following. Except for some part of the H1, government has directed us not to disconnect the connections.
Okay. So, I mean, the customers are not out. The customers are still there with you, and they will be consuming that power. So that is why you believe that you will be able to recover this amount. Is it?
Yes.
Okay. Got it. Okay. Perfect. Got it, sir. Thank you so much.
Thank you. The next question is from the line of Devam Modi from Ardeco. Please go ahead.
Yeah. Hello, sir. Thanks for the opportunity. Sir, firstly, just wanted to know what is the total invested block in the renewable piece in the wind part of 649 megawatts?
So Devam will give that offline. Right now we don't have that number handy.
So just wanted to get an idea. We understand that there is a part which came up 176 odd megawatts in FY20, and there must be an earlier piece which was obviously already there. So what are the kind of normal condition PLFs we are looking at from the whole portfolio, and if you could split it between FY20 commissioning and the earlier piece?
So this 170 megawatts which you're talking about, it's not in Torrent Power. It is in subsidiaries of Torrent Power. So I'll give those data offline separately because we don't have right now on a handy basis.
Sure. And on the gas-based plants, we have obviously seen a great improvement in diesel volumes in H1 compared to previous year. So now we understand that the spreads are down, but what would be the visibility in terms of volumes for H2 and going ahead over there? And what kind of spreads would you guide? I mean, what should we look at for looking at the spread over there?
So there we typically don't give any guidance per se, but if you look at from electricity demand perspective, typically H1 is one of the best half years. I mean, best half year, and H2 is generally a subdued half year. So if you next half year would not see such kind of volume per se. But on an incremental basis, if you look at last 2 years, we have been able to increase volumes coming out of DGEN. Partly because of better exchange prices and partly because of lower gas prices. And we expect that gas prices to remain subdued or at these levels going forward also because of international LNG supplies being available in plenty. And if let's say demand picks up on exchange, we would be able to sell more power from DGEN.
So also on the gas front, we have been hearing before some time that there was some policy which was coming to support the gas-based plants. So has anything come and is anything expected on that front which should help region?
No, I think government has shelved that plan now as far as gas-based power plants are concerned.
Sorry, I did not get the answer.
I'm saying government has shelved those plans of subsidizing gas-based power plants. So we don't expect anything to come there.
So in the medium to long term, till demand picks up, because this plant does not have a PPA, this will always be subject to some under recoveries which will be there till demand picks up substantially.
Yes. So on a medium term basis, yes, but on a long term basis, if demand picks up, I think average PLF of all the power plants in the country should go up, and that there we could have an opportunity to tie up a long term PPA, but that is some time away as of now. So on a short term or a medium term basis, it would be a peaking power supplies or on supplies in exchange, or on a short term basis, short term contracts of 1-2 months kind of structure.
And we have been hearing a lot about this privatization of distribution franchises from the government. So over there, anything which is probably in the works, apart from obviously Delhi, you said you don't want to mention anything, but apart from that, any other circles is coming up for bidding, probably or some action is going on from the next, let's say, 1 year perspective?
So I think the central government is planning to privatize those 7 or 8 areas. There, I think the government is drawing up the plan. So once that is successful, other states will also start picking up from there. But as of now, there are no firm areas of firm franchisee or licensed I think opportunities which are available, which I can say that yes, this is there in the market.
So, sorry, I mean, from what I understand, you mentioned that central government is looking 7 to 8 years, so this will mainly be union territories and things like that.
Yes.
Okay, so there is some bidding work which is going on over there in terms of some certain union.
No, it is right now in a drawing plan, draft guidelines are out or draft parameters are out, which everybody is looking into, and that is for 2 areas. So bidding phase has not yet come.
Okay, so this would be at least a year away in terms of action, in terms of the bidding action.
I think a year is too long a time. I think we expect by, let's say, March or Q1 of next year should be a time wherein we can expect something.
And finally, just if you can confirm the gross debt and the total cash and cash equivalent as of September.
The gross debt was about 8,600 crores.
Yes.
And treasury balance is about 1,000 crores.
This is all the cash and cash equivalents which will be there?
Yes.
Okay, sure. That's it from us.
Thank you. Ladies and gentlemen, due to time constraint, we take the last question from the line of Mohit Kumar from DAM Capital. Please go ahead.
Thanks for the opportunity once again, sir. Sir, couple of clarifications. So are you participating in this Odisha for distribution licensing?
No.
Okay. And secondly, also Mumbai Shil Kalwa, so see, we just started. We must have a very tough quarter. But how do you expect this to behave over the next 2-3 years? And have you started working on the long-term measures, or is this still a challenge at this point of time?
Shilmunda and Kalwa is a 90% residential area. So, like for example, as you have observed that Bhiwandi Nagra, we got a good success. So it's a very small area compared to Bhiwandi and Nagra. So we expect that the next 4 years time we will invest in a network augmentation. So we will see the success in reducing the T&D losses and as well as the AT&C losses also in SNK.
Understood, sir. Thank you, sir. Thank you.
Thank you. I now hand the conference over to Mr. Harshvardhan Dole for closing comments.
So if deemed fit, I'd like to squeeze in a couple of questions from my side. Okay. One is, in general, we are getting a feedback that the renewable competitive intensity is likely to ebb out. Firstly, your thoughts on that, and if so, in terms of capital allocation, do we intend to bid more aggressively and look forward to put up renewable capacity? That was the first question. Second question was basically, pertaining to a revival of gas-based power plants. Any further progress on that side? Thank you.
Renewable capacity, we are selectively looking into it, and selectively we'll bid for the new capacities. And
unless we have certain parameters which we have discussed earlier also. Unless we meet those parameters, we will not be planning to win any project. But if it is coming under those parameters, we will definitely like to look at it. So if the competitive intensity goes down, then we will definitely want to look at it if it is fitting our parameters, as we had discussed earlier also. Right. And as far as gas-based power plants are concerned, I think government is no longer going ahead with the plan which they were having, like in 15-16, wherein they had given some subsidized gas, which they have shelved as of now. So as far as DGEN is concerned, as we discussed, right now it is more of a short-term, medium-term perspective, wherein it would run for peaking power or for sale in exchange, and some short-term contracts with DISCOMs.
Well, I think we have completely run out of time. And on behalf of IIFL, I would like to thank the management for giving us the opportunity to host the call. And I would also like to thank all the participants for logging into the call. Thank you very much.
Thank you so much. Thank you.
Thank you. Ladies and gentlemen, on behalf of IIFL Capital Limited, that concludes this conference.